Welcome everybody to Commerce Ki Pathshala. Commerce Ki Pathshala is an initiative to help students understand various topics related to the stream of commerce, especially in the stream of accounts and audit. I am Rakhshan, taking you on the journey of audit. If you like this video, if you think it was informative, please share it, subscribe to the channel and hit the like button. So let's get started. So the definition stated in the professional books of Chartered Accountant, Company Secretary and other BCom level books is as follows. An audit is an independent examination of financial statements of any entity, whether profit oriented or not, irrespective of its size and legal form, where such an examination is conducted with a view to express an opinion thereon. While learning and memorizing this definition and mentioning it in the examination will give an extra edge to the students, but considering the complexity, it's a bit cumbersome. So let us now try understanding what an audit is and then move forward towards learning the definition. So what is an audit? If I have to check synonyms for audit, it will go like checking or cross-checking, validating, examining, scrutinizing, and so on. While all of this forms a part of an audit, let us try understanding it with a day-to-day example. So example number 1. It says exam paper checked by the examiner. So what exactly an examiner does? The examiner takes the answer sheet of the students and validates it or cross-checks it with the suggested papers that he has. So what is this? He's done an audit of the paper, the student's paper. Secondly, we have monthly bills validated by us before payments. So what we do of those bills? Take electricity bill for an example. You check the unit rate, you check the units, you check the month, and what have you done? You've done the audit of the monthly bill before making the payment, before incurring that expense. Likewise, the third example, cross-checking of products received with products ordered on online shopping. So what you do is you check the list of the grocery you've ordered online with the material, with the products that you've received. So what you've done cross-checking, you've audited. Lastly, we calculate the salary of an employee with the number of days that the employee has come to work. This is also nothing but auditing. So all of this comprises, it is nothing but an audit. Now let's move towards learning the definition. For ease purposes, we have divided the definition in various parts. We'll understand all the parts and we'll start joining the dots, and at the end of it we have memorized the definition very well. So the first part, an audit. So we've understood what an audit is. We move towards the second part, which says an independent examination. Now what is an independent examination? So is an independent examination. What is the definition of independent and examination? Definition of independent: free from outside control, not subjected to another's authority, and not depending on another for livelihood or subsistence. The definition of examination: a detailed inspection or study. So while we combine both these definitions, what we understand is an audit should be independent examination. That means an auditor's opinion on the financials, on the supportings and the documents that he has audited or cross-checked should not be influenced as to what management wants him to say. His opinion should be independent of management's influences and desires. It should also not be influenced by any financial favors which he might get from a third party or from the management or from the stakeholders, etc. However, the financial favors does not include the audit fees. After all, audit fees is the fees for the service an auditor gives. It is not a financial favor. So the same should not be confused. It should also be independent of what the stakeholders want the auditors to state. For instance, a stakeholder or shareholder would always want a higher profit to be stated, and the same should be validated by the auditor for his share prices to go up. However, an auditor should not influence his opinion on that expectations. If, for instance, an entity has a negative net worth, the same should be stated and the same should be vouched for. Lastly, it should not be influenced by any kind of pressure that the auditor faces from the society, from the government, and people at large. So now we conclude the two parts of the definition. We have concluded what is an audit, and we've also concluded an independent examination. So as soon as you talk of an audit, you should have an independent examination right next to it. Going forward to the third part of the definition, which is of financial statements. Now, what are the financial statements? The interesting part to look for in this definition is that the auditor states the audit of the financial statements, and it does not state the audit of balance sheet, the audit of profit and loss, the audit of cash flow, etc. It has taken the financial statements to be there in the definition. So the financial statement includes everything. It includes the balance sheet, it includes the statements of profit and loss, cash flow statements, notes to accounts, statements of shareholders' equity if you are considering the Ind ASs. It also includes the audit of all the vouchers, the documents, the registers audited by the auditor. So we've covered three parts of the definition so far. We've covered what is an audit, we've covered an independent examination, and we've covered what are the financial statements. So now if you link the three, we have an audit is cross-checking independently of the documents of the financial statements of an entity. We'll take a step forward. We understand when we say of an entity, what does an entity means? So an entity means, the general definition of an entity is a thing with distinct and independent existence. A thing of observation, a thing to notice in this definition is that it states the audit of an entity, and it does not state an audit of a company, a partnership firm, or a proprietary firm, etc. It states an audit of an entity, and thus the entity includes a company, be it public or private. It includes partnership firms and LLP, an HUF, a proprietary firm, NGOs and Section 8 companies, trusts, etc. So the definition is inclusive of all the types of entities. It is not specific to a particular entity, like not specific to company, not specific to partnership firm or a trust, etc. It includes auditing of various organizations. Thus, we've covered three parts over here. We've covered an audit is an independent examination of financial statements of an entity. We move a step forward. We talk about the next part of the definition, the crucial part of the definition, which says whether profit oriented or not, irrespective of its size and legal form. Now, profit oriented or not and irrespective of its size and legal form it's spoken in relation to an entity. What does it mean? Which means the entity need not be an establishment for profit making, and it includes other entities which are formed for various other motives, such as hospitals, NGOs, trusts, government agencies, and etc. So the various other forms of entities which are established for service motive does not or is not barred from audit. If there's a mandate, if there's a statutory requirement, the same will also be audited. So in defense, when they say that we are not for the profit motive, we are serving the society, it does no good. Even those entities are very well covered in the definition of an audit, and the same will be subject to scrutiny. Also, it says irrespective of its size and legal form. So what is it? So the size of an entity is not relevant factor to be considered for audit purposes. Thus, it includes all sizes of entities, right from small to medium to large to very large. So all these entities are subjected to audit. If the statute states, even the smallest of the company will be scrutinized by the auditor. With this, we've learned the definition so far. We've studied what is an audit. It is an independent examination of financial statements of any entity, whether profit-oriented or not, irrespective of its size and legal form. Which brings us to the last part of the definition, which says, where such an examination is conducted with a view to express an opinion thereon. Thus, it clearly states that an examination is conducted by an independent person with the purpose of forming a judgment, with the purpose of forming an opinion on what has been examined and tested, and express an opinion thereon. So when you do something with a motive in mind, with a purpose in mind, the conclusion is with an expressing that opinion, with expressing that conclusion. An audit, you express an opinion via an audit report. And when we talk of the last word thereon means the documents that are subjected to the audit, such as vouchers, supporting, accounts, processes, etc. So, this examination, when you cross-check the vouchers, supportings, your opinion is formed whether they show a true and fair picture of an entity, whether the classification of the accounts are accurate, whether the supportings are valid, whether the vouchers are not forged. All of those opinions are formed while conducting an examination, and the same is expressed by the auditor in form of an audit report. An audit report will be a different chapter, will be a different lecture. So now we move on. What have we concluded? We've seen what is an audit. We've seen the independent examination of financial statements of any entity, and that entity need not be profit-making entity. It could be whether an profit-oriented or not. We've seen that it is not influenced by the size and the legal form. We've also seen that the examination, when it is conducted, has to be expressed, and the same is expressed via an audit report. I hope the definition is well understood. It is well absorbed by the students. Any kind of doubts, any kind of queries are most welcome. Please leave them in the comments below. Thank you very much. Happy learning. Goodbye.